The iShares Broad USD High Yield Corporate Bond ETF, or USHY, is a popular exchange-traded fund that provides investors with exposure to the high-yield corporate bond market. This market is characterized by bonds with lower credit ratings, which typically pay higher interest rates than higher-rated bonds. While these bonds come with a higher risk of default, they can also provide investors with the potential for higher returns. In this script, we will delve into the details of the USHY ETF, including its investment objective, portfolio holdings, and performance. We will also discuss the potential risks and benefits of investing in high-yield corporate bonds, and how the USHY ETF can be used as a tool for investors seeking exposure to this asset class. First, let's take a look at the investment objective of the USHY ETF. The fund's goal is to track the performance of the Bloomberg Barclays U.S. Corporate High Yield Index, which consists of bonds issued by U.S. companies with lower credit ratings. These bonds are known as junk bonds, as they are considered riskier investments compared to higher-rated bonds. The index is market capitalization weighted, meaning that the largest and most liquid issuers have a greater impact on the index's performance. Now, let's examine the portfolio holdings of the USHY ETF. As of August 2021, the fund had approximately 400 holdings, with the top 10 holdings accounting for roughly 25% of the total portfolio. Some of the largest holdings include bonds issued by companies such as Verizon Communications, AT&T, and Sprint Nextel. The fund also has a relatively high level of diversification, with exposure to a variety of sectors including energy, telecommunications, and healthcare. Now that we have a general understanding of the USHY ETF's investment objective and portfolio holdings, let's take a look at its performance. Over the past 5 years, the USHY ETF has returned an annualized 7.7%, which is relatively strong compared to other bond funds. However, it's important to note that the high-yield corporate bond market is known for its volatility, and the USHY ETF's returns may vary significantly from year to year. For example, in 2020, the fund returned a negative 2.2% as the coronavirus pandemic led to a significant drop in bond prices. So, what are the potential risks and benefits of investing in high-yield corporate bonds, and how can the USHY ETF be used as a tool for investors seeking exposure to this asset class? One of the primary risks of investing in high-yield corporate bonds is the risk of default. Because these bonds have lower credit ratings, there is a higher probability that the issuer may default on its debt obligations. This can result in investors losing a portion or all of their investment. Additionally, the high-yield corporate bond market is sensitive to changes in economic conditions, and bond prices can fluctuate significantly in response to events such as recessions or rising interest rates. However, there are also potential benefits to investing in high-yield corporate bonds. These bonds typically pay higher interest rates than higher-rated bonds, which can provide investors with the potential for higher income streams. Additionally, the high-yield corporate bond market has historically had a lower correlation to the stock market, which means that it may not move in the same direction as equities. This can make high-yield corporate bonds an attractive option for investors looking to diversify their portfolios. So, how can the USHY ETF be used as a tool for investors seeking exposure to the high-yield corporate bond market? The ETF provides investors with an easy and cost-effective way to access a broad basket of high-yield corporate bonds. It can be bought and sold on stock exchanges like a stock and its market.